Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. I want to discuss about what might happen to the stock price next year once the new factories open up, and what the important elements are we need to keep our eyes on, and how the company and stock price might progress towards the end of the year. I know what you're thinking. Did I read that right? Tesla Economist saying that Tesla's stock price could be flat next year? What is he talking about? There is so much happening. We have these new factories, and 4680 batteries, and so much demand from potential rebates in the US. Tesla is off to Mars next year. It's going to be a killer year. Well, Tesla is still a manufacturing company, or at least at its core, it has to manufacture to grow, and these are capital-heavy items. Cars, not just phones. We're still very much limited by the pace at which Tesla can produce. I don't know how many of you recall that I said the same thing at the start of this year. Nothing much is going to happen to the stock price for the first half of the year. The air will be taken out, as all we really had was the Model Y growth in Shanghai, which, admittedly, did do better than I imagined, but still didn't get going until more towards the end of the year. I was expecting perhaps October we might have seen Berlin open and then the stock price recover. We are now in December and it still hasn't opened. But fortunately, Model Y in Shanghai is beating expectations and alleged capacity. But as I said at the start of the year, there aren't any events to prop up the stock price. But you just need to hold on until these factories are opened. And as a result, eventually it dipped, but then did recover due to the numbers from Shanghai. I also said that beware, there could be any Tesla event announced out of the blue, like a compact Tesla unveil or anything else unknown. And there was. They announced robots. Not that it affected the stock price. I'm just saying that it's best to hold, as you never know. But we did see that Hertz order, which sent the stock price off that no one expected. I'm expecting a similar year this year. Of course, all macro events aside, Tesla's stock price could start off with a bang. Production for the quarter could likely hit above 300,000 units. And I think profits should be good too. Although there are rumours margins might not be high as possible, possibly due to supply chain issues and maybe Model X ramping. On the other hand, we are seeing more low-cost LFP batteries being used and Model S being ramped up higher. Either way, I expect profits to be at least 50% higher than Q3 for Q4. All the other events, Berlin and Texas opening, 4680 batteries, EV rebates, etc., all in the space of this period, and February and January could really see the stock price take off. Could even go so high that then we have a split announced too. But once all this dies down, then there isn't much more fuel left for the fire. Cybertruck likely won't be released until later in the year, perhaps towards the end. We may have a compact unveil, but that might not affect the stock price majorly. Berlin, Texas are huge facilities that cost a lot to run whilst ramping up, and we possibly expecting low numbers, possibly only 30,000 per factory for the first half of the year. I think mainly due to lack of 4680 and 2170 batteries, but we did hear a run rate of 100 gigawatt hours of 4680 by the end of the year too, which would be great. So whilst these factories are ramping up, the margins on these new vehicles will be low, and the factories will probably be running at a loss. On Q1 financials, we could see margins down a lot, and even net profits. Then imagine the FUD that will come out of that. I just wanted you to be prepared and not too surprised, as it takes a really long time to ramp up vehicle production, especially for battery electric. It's not an overnight thing. It will take likely 2 years until these factories reach their capacity, which is why I've generally purchased leaps that far out to get over this hurdle. But at the end of 2022, we could have Cybertruck in production, which is going to be a great milestone and prove all the naysayers wrong. A product this cool almost feels illegal to own, it's so awesome. So for it to come into fruition is a really big deal. It's possibly the most coveted vehicle of all time, given an estimated 1.5 million pre-orders. We could face unknown issues with ramping up too. We have two variables, the ramping up of the factories and the ramping up of the production of the 4680 batteries. It looks like Tesla are reaching a good yield now at the Cato Road facility, but that took a long time. And sure, they've learned a lot, but these new lines in Texas and Berlin will take a while to get set up and start producing high yield volume production. Basically, the whole of next year will be dependent on the success and levels of how 4680s, Berlin and Texas ramp up. That's what we need to keep our eye on. There could be struggles, we could have macro factors like supply chain issues too. Sure, you can say there are other events that might come out, but they're mainly distractions. We need to see the proof that Tesla can take the business to the next level, moving from 1 million units a year to run rates of multiple millions. It may take a couple of years, but all factories combined could be at a run rate of somewhere between 4 to 6 million at the end of 2023. And let's not forget the margins we might expect. If we hit a run rate of 100 gigawatt hours by the end of next year for the 4680 batteries alone, and expect a similar amount from Tesla's partners, then that's 200 gigawatt hours for the start of 2023, which is about 3 million vehicles. But 4680 lines should be ramping exponentially. Once we have the machine that builds the machine, a potential run rate of 3 million at the start of 2023, with Texas and Berlin 4680 lines with supposed 250 gigawatt hour a year capacities. If they're ramped up by the end of 2023, then that's 500 gigawatt hours, and possibly the same again with partners, of which by this stage I'm mainly talking about CATL. Well, that's a terawatt hour, give or take. Well, that's enough batteries for over 10 million vehicles a year. But we should also have Tesla's LFP batteries starting production too, perhaps. Anyway, I'm telling you how I get these numbers and just inferring what they mean or could mean. It's exciting. I'm not necessarily saying that I expect a run rate of 10 million vehicles a year by end of 2023, just showing possibilities for indicative purposes. But even if we half that and have a run rate of 5 million a year, well, if we have a gross profit of $20,000 per vehicle, then that's $100 billion gross profit. Even if OPEX is up to $20 billion, then that's probably a net profit of something like $70 billion after tax. Just a rough guess. A P/E ratio of 50 is $3.5 trillion. And we're saying at the end of 2023. OPEX shouldn't even be that high, as we have less amortization and depreciation as time goes on, unless we start building more terafactories, which it sounds like the factories will possibly get smaller and more efficient. I mean, we could also say a run rate of 10 million vehicles a year, $20,000 gross margin per vehicle, and a P/E ratio of 100 with OPEX of $30 billion. Oh wait, is it me, or does that come to $17 trillion valuation? I think it actually might. But a PE of 100 might be pushing it a bit, and this may not be achieved by the end of 23 either. But bear in mind, to hit 10 million vehicles a year, we will need more models, and I'm not just talking about the Cybertruck, but likely the compact version. But you might think, there goes the margin on the compact vehicles. Well, in a previous video, we worked out that the compact vehicle is going to be highly profitable due to the forced FSD costs, i.e. no pedals and no steering. But even if we skip the compact, if you don't like that concept, we still have a coupe, a smaller Cybertruck, a station wagon, a larger version of the Model Y, probably a larger version of the Model 3, maybe a convertible, a semi-truck, roadster, etc, etc. In other words, Tesla will have capacity for enough batteries for 10 million vehicles and enough models that offer enough variety that there will also be the demand for that many vehicles. And these could all produce an average of at least $20,000 profit margin, possibly much higher when level 5 autonomy is reached. Yeah, seriously, 2025 or even 2026, if we get 10 million sales a year, perhaps the stock price could be $20,000, including all the other sides of the business. There is somewhat an expectation of $10,000 stock price kind of by 2030, but when you do the numbers, sometimes that price comes a lot earlier. It wouldn't be the first time Tesla has 10x'd in that period of time. Anyway, I just think we have to be realistic with the stock price. It's not always on a run. And Tesla will really need to get to grips with their new factories, production lines and in-house batteries. So prepare, I say prepare, not expect, the stock price to not do much for possibly about February to October in 2022, and maybe even dip a little bit over that time. But likely we will come out of it incredibly strong and build a serious foundation of a run rate of a few million, and a decent amount of batteries being produced too. I'm also not saying the stock price is going to crash. We could see it jump to $1,800 or something, only to drop down to $1,400, and may take the whole year to possibly reach $2,000. Again, all macro events aside, just as a rough idea, don't hold me to these numbers, and there could be some spikes along the way too. Stock splits, semi-truck, Cybertruck, in-house LFP announcement, FSD breakthroughs, compact and unknowns. Of course, we could be being sandbagged again too, and we might see ramping as fast as we saw in Shanghai with the Model Y in these new factories. But bear in mind, Shanghai was using LFP batteries to accomplish that. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.